in the delivery of medical care that focus on patient safety need to occur. Industry observe say gaps in non-economic damage according to the National Conference of States. Gaps in non-economic damage according to the National Conference of State Legislatures. 30 states, the Virgin Islands and Puerto Rico limit jury awards in malpractice cases in the last few years. A number of courts have ruled against such limits. In Georgia, the Supreme Court ruled that a 2005 state law that limited jury awards for pain and suffering in malpractice cases to improperly interfered with jury duty to determine damage in a civil lawsuit. In the decision, Chief Justice said that limits in any amount violate the right to trial by jury in illness. The Supreme Court overturned the state's 2005 medical state which kept non-economic medical awards at in lawsuits against physicians and for hospitals. The court ruled that the law violated the state constitutional principles of separation of powers in that lawmakers had made decisions that should be made by judges and juries. Some states, such as Maryland, are deciding to retain their caps when challenged. Arbitration to keep small disputes out of the courts. Insurers are increasingly turning to arbitration. The nation's largest arbitration provides non-profit arbitration firms resolved more than insurance disputes in 2009, valued at 2.5 billion for a savings in cost of 700 million. Disputes leading to arbitration typically arise when insurance or self-insured companies over the percentage of liability of the amount of damage. More than 85% of these disputes involve auto collisions. Total liability environment. In December 2009, the American Tort Reform Association released its annual list of states and characterized as judicial places with courts that have a harmful impact on civil litigation. ATRA News list includes 6 judicial, including holdover South Florida, West Virginia, Cook County, Illinois, and Atlantic Country, New Jersey, and New Mexico, appellate courts, and New York City, which are new on the list. ATRA highlights several reforms that can help restore balance to these jurisdictions. They include stopping venue shopping, looking for jurisdictions where juries are favorable to plaintiffs, imposing sentences of winning lawsuits, stemming abuse of consumer laws, ensuring that non-economic damage awards serve a compensatory purpose, and setting rules to promote sound science in the courtroom. Microinsurance. A growing number of insurers are tapping into market in developing countries through microinsurance projects which provide low-cost insurance to individuals. generally not covered by traditional insurance or government programs. Microinsurance products tend to be much less costly than traditional products and thus extended protection to a much wider market. The approach is an outgrowth of the microfinancing projects developed by Bangladesh Nobel Prize winning banker and economic Muhammad Yunus, which helped millions of low income individuals in Asia and Africa to set up business and buy houses. American International Group was one of the first companies to offer micro insurance and began selling policies in 1997. Swiss Re Allianz and Zurich Financial Services have also entered the micro insurance arena. Disasters such as the 2005 in Indonesia and the 2010 Haiti earthquake have demonstrated the need for insurance in many regions, promoting insurers to develop new products. While the coverage is often geared to protection from natural disasters, there are also programs covering life health risk as well. With limited growth prospect in the insurance markets of developed countries which are already saturated, insurers see microinsurance in emerging economies as presenting significant potential for growth and profitability. In emerging markets far outpaced growth in industrialized countries. In 2008, the study identified the following regions as emerging markets: Latin America, Central and Eastern Europe, South and East Asia, the Middle East, excluding Israel, and Central Asia, Turkey, and Africa. In 2009, the International Association of Insurance Supervisors, the World Bank, the International Labour Organization, and other groups launched a program to improve access to insurance in emerging and underserved markets called the Access to Insurance Initiative. Also in 2009, representatives from over 60 countries participated in the 5th International Microinsurance Conference, which was organized by the Reinsurance and the Micro Insurance Network, a joint effort of aid organizations, multi-lateral agencies, insurance policy makers, and academics. No fault auto insurance and other auto liability system. State auto liability insurance laws fall into four broad categories: no fault, choice, no fault, tort liability, and add-on. The major differences are whether there are restrictions on the right to sue and whether the policyholder on insure pays first party benefits up to the state a maximum amount regardless of who is at fault in the accident. These alternative systems have evolved over time as consumers, regulators, and insurers have sought ways to lower the cost and speed up the delivery of compensation for auto accidents. The term no fault auto insurance is often used loosely to denote any auto insurance programs that allows policyholders to recover financial losses from their own insurance company regardless of fault, but it stretches from non fault applies only to state laws that both provide for the payment of no fault first party benefits and restrict the right to sue. The so-called limited tort option, the first party benefit coverage, is known as personal injury protection. Under current no fault laws, motorists may sue for severe injuries and for pain and suffering only if the case meets certain conditions. These conditions, known as a threshold, relate to the severity of injury that may be expressed because high verbal thresholds eliminate the incentive inflate claims that may state the verbal threshold language, and PIP coverage has become the target of abuse and fraud by dishonest doctors and clinics that that bill for unnecessary and expensive medical procedure, pushing up costs. Currently, 12 states and Puerto Rico have no fault auto insurance laws. Florida, New Jersey, New York, and Valencia have verbal threshold. The other seven states, Hawaii, Kansas, North Dakota, and Oregon, use a monetary threshold. Three states have a choice no fault law in New Jersey, Pennsylvania, and motorists may reject the lawsuit threshold and retain the right to sue for any auto related injury.